Everyone, chalo. So we'll start with the last chapter of our this batch, revision batch, AS 13 accounting for investment. Okay. Now, accounting for investment. So accounting is done as per AS 13. So first let us read what AS 13 says. Okay. So what is the meaning of investment? Investment means what? Investment are any asset which are held by the entity for earning income by way of dividend, interest or rent. Means income by way of dividend means it can be investment in equity shares. Investment by way of interest means investment in any debentures or bonds or any government securities. Investment by way of rent means investment property. Investment property. Or capital appreciation or any other benefit, or it can be held for capital appreciation. For example, you purchase land and building, you held it for capital appreciation, that become your investment. Okay. Now, what is the classification of investment? For the purpose of valuation, it has been classified in two categories. One is current investment, one is long-term investment. So what do you mean by current investment? Any investment which are readily realizable, which can be easily converted into cash, readily realizable, and which is intended to be held not more than 1 year from the date of purchase, which are intended to be held for not more than 1 year from the date of acquisition, that become current investment. Meaning is very simple. So what is not current investment? That become long-term investment. So for current investment, our AS 13 says that current investment will valued at cost price or fair value, whichever is lower. So cost price or fair value, whichever lower. Now just try to understand, any investment will not have fair value. Sorry, any investment will not have market price. So any investment which have market price, the fair value is equal to market price. But any investment which do not have market price, we need to find out its fair value. For example, if I say listed shares will have market price, so that is fair value. But unlisted share does not have market price, so we can calculate intrinsic value. So intrinsic value is what? One of the example of fair value. So therefore, they have not used the word market price. They have used the word fair value. The cost price of fair value, whichever is lower. Correct? Understood? Now, if there is a loss, means if the market price, if the fair value is less than cost price, so of course there is a decline in the value of investment. So that loss will be charged to PL account. What will be our journal entry? PL account debit to investment. Correct? And if there is some reversal of such reduction, ho sakta hai in the next year the loss whatever you have charged, that is reversed, then we reverse the journal entry, investment account debit to PL. Understood? Means anything written off or anything reversed, that both will be transferred to profit and loss account. Current investment is this much only. Now what is long-term investment? Long-term investment are those which are not current investment. So for that, AS 13 says that it will be always valued at cost price. Means for that, valuation is what? Cost price. So it will not be carried at cost price of fair value, which is lower. Long-term investment will be always valued at cost price. But if there is suppose any permanent decline which are not of temporary nature, decline which are of permanent nature, then we should create a provision for such decline. So we need to create a provision for permanent decline if that decline is of permanent nature. So that will become the carrying amount. Understood? Yes, sir. So what will be the accounting treatment for creating provision for permanent decline? PL account debit to provision for permanent decline. However, if that provision is no longer required, means if suppose in the future there is some appreciation in the value of investment and the provision is no longer required, to reverse it, then our journal entry is provision for permanent decline to PL account. You can see for current investment, what was journal entry? PL account debit to investment, means we are reducing the value of investment. But for long-term investment, we are creating a separate provision. So the journal entry is PL account debit to provision for permanent decline. Understood? Yes, sir. It is very easy. Now, investment property, they say that any investment in land or building or both, which are held for earning rental income or for capital appreciation, that become investment property. So investment property are always considered as long-term investment. It cannot be current investment. And for Valuation of investment property AS13 says that apply cost model as per as per AS10. So the measurement principle is not given under AS13. They said go toward AS10 and apply only cost model. There is no revaluation model. The revaluation model is not permitted for investment property. Understood? So how to find out that cost price? Cost price less accumulated appreciation less accumulated impairment loss. Impairment will be done as per AS28. Depreciation will be calculated as per AS10. As per AS10. Okay? Understood? So accounting of investment property will be as per AS10. Okay, sir. Now, how to find out cost price of investment? The cost price will be purchase price. Any brokerage, any fees will be added. Any taxes on purchase will be added. Any expenses to claim title, means registration fee, stamp duty, whatever is paid will be also added, and that will become cost price. Simple. Correct? Nothing to explain. If acquired in exchange of non-monetary assets, similar treatment. If acquired in exchange of non-monetary consideration, then the first preference will be given to fair value of asset given up plus minus cash adjustment plus or fair value of asset received, whichever is clearly evident. However, if acquired in exchange, understood na this point, fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. However, in this case, the last option, carrying amount of asset given up, that is not given. I don't know why it is not given. It should be also given. So if acquired in exchange of non-monetary asset, they have given only 2 points, fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. However, if acquired in exchange of shares or any other securities, so if you have acquired any investment by allotment of equity shares or any other shares, then the cost price will be equal to fair value of securities issued. Fair value of securities issued. Correct? So in this case, only one option has been given, fair value of securities issued. Okay? Okay, but this type of question they are not asking. This point is very, very important. They have asked a lot of time this point. Reclassification of current investment to long-term investment or vice versa. Whenever you are reclassifying any investment from current to long-term or long-term to current, to at what price reclassification will be done? So whenever you are doing reclassification from long-term to current, to reclassification will be done at carrying amount of that investment or fair value of that investment, whichever is lower. So at I have said this, what I have said, my mistake. Whenever long-term investment are reclassified as current investment, I was saying this now. If long-term investment are reclassified as current investment, then transfer at, means reclassification will be done at cost price or carrying amount, whichever is lower. Carrying amount, cost price or carrying amount, whichever is lower. Means can I say just try to long-term investment has been reclassified to current investment. So long-term investment cost price, and if there is a provision for permanent decline, then the carrying amount will not be equal to cost price. Correct? So what they have given two options, cost price or carrying amount. Carrying amount will be after deducting provision. So if there is a provision for permanent decline, always carrying amount will be lower than cost price. Correct? So they have given two options, either you take cost price or carrying amount, whichever is lower for this reclassification. Understood? However, if the reclassification is for current investment to long-term investment, means current investment is reclassified to long-term investment, then you should do at cost price or fair value, whichever is lower. Cost price or fair value, whichever is lower. Understood? Very easy. Let me take one question on this. This type of questions is very much popular, means have been asked many times. Blue Chip Equity Investment Limited want to reclassify its investment in accordance with AS13. So they are given three cases. Long-term investment in company A costing rupees 8.5 lakh are to be reclassified as current. Long-term to current. What is the cost price? 8.5 lakh. The company has reduced the value of this investment to 6.5 lakh to recognize other than temporary decline in the value. So they have created a provision, and the carrying amount is what? 6.5 lakh. The fair value on the date of transfer, this is not relevant. The fair value on the date of transfer is not relevant. So you will do at cost price or carrying amount, whichever is lower. So what is the answer? 6.5. Then you got 2 marks. Then long-term investment in company B costing rupees 7 lakh are to be reclassified as current. The fair value on the date of transfer 8 lakh and the book value is 7 lakh. So 8 lakh is not relevant. Correct? You will take cost price or carrying amount because there is no provision for permanent decline. So cost price and carrying amount are same. Therefore reclassification will be done at 7 lakh and you get another 2 marks. Current investment is 10 lakh to be reclassified to long term. As the company want to retain them, the market value is 12 lakh. So this become fair value. You will take cost price or fair value whichever is lower. So answer is what? 10 lakh. You get another 2 marks. So this type of question very easy. Only just retain the concept. Suppose you forgotten, so you'll do mistake. So these are the point which is based on the content. If you remember the content, you can answer. Okay. Chalega. But you should write down properly if this is descriptive questions. Okay. So this is one type of question which is very popular. Now on disposal of investment, any gain or loss will be transferred to PL. So disposal of investment will find out net disposal profit means sale price minus any cost of disposal. From that you deduct carrying amount. The difference will be gain or loss and that will be transferred to PL. Correct? Scope ho gaya, done. Now the chapter will start. Investment accounting. Understood? This was AS 13. But they will ask question about investment accounting. Now for the purpose of investment accounting, to understand accounting of investment, they have divided all types of investment other than investment property. Means they are not asking any question of investment property. So they are asking question about investment in shares, investment in debentures, investment in bonds, investment in government securities, etc. So for the purpose of accounting treatment, all types of investment other than investment property is divided in two categories. One is known as fixed income bearing investment. Second is known as variable income bearing investment. So for fixed income, example will be investment in debentures, investment in bonds, investment in government securities, etc. When I am saying variable income, the example will be investment in equity shares. Preference will come in which category? Fixed or variable? Now it will be also what? Variable only. Just try to understand in case of preference dividend, rate is fixed, but the dividend is not fixed. Income is not fixed. Means whether it will be declared or whether it will not be declared, that is as per the discretion of entity. Therefore, the income is variable. Income is variable. Rate is fixed, but the income is variable. However, they don't ask question of preference shares. They ask only question about equity shares. Understood? But if they ask, then for preference shares, we need to apply the rules of variable income bearing investment. Got this point? Have you understood? Now let us first start with the fixed income bearing investment. Fixed income bearing investment, correct? But before I start, I need to give you, I need to revise one concept of X interest and cum interest. You all know about X interest and cum interest? So what is X interest and cum interest? So you know. What is the concept? Let me explain that. Correct? So X interest and cum interest. Okay. Means, suppose you purchase 10,000 debenture of any company at this point of time on 1/4/2021, whose rate of interest is 10%, face value is equal to 100, and you have purchased at a cost price of 120. Cost price of 120. Okay? So you purchase how many debenture? 10,000 of rupees 100 at rupees 120. What is the rate of interest? 10%. Correct? Now the question will give you the due date of interest. Due date of interest with when the company will pay interest. When the company will pay interest. Okay? So normally they provide, suppose they provide the due date of interest in this way. This is 31st March and company will pay on 30th June and 31st 12. So on this date company will pay. This is the due date of interest. Due date of interest means company will pay after every 6 months. So company is paying after every 6 month interest. So in this, just try to understand the due date of interest and year end are different. So quite possible. It can be same, it can be different. Means it is quite possible they have given 30th June and they have given 30th September and 31st March. It is also possible. Why it is also possible? So company is paying after every 6 months. Company is paying after every 6 months. ठीक है ना? Correct. So can you say on this date interest will be received for how many months? Suppose this is the date of, let's say this is the date of incorporation of company also. So the 3 months. 3 months. So that will be 10,000 into what? Into 100 or 120? Into 100. So interest is always calculated on nominal value. Always on nominal value. Into what? 10% into what? 3 by 12. So how much interest will be received? How much? $25,000. 25,000. Understood? Correct. Now what happened? On 30th September, correct. So this was Mr. X who has purchased. So Mr. X is an investor. Now Mr. X has sold this investment to Mr. Y. Mr. X has sold to Mr. Y. So we are doing journal entry in the books of X. Okay, na? So 3 month interest has been received. Now this sale was done at, suppose, 130 rupees. At 130 rupees. 130 rupees. Understood? So can you say Mr. X will demand how much? They will demand 10,000 into 130 plus 130 is equal to how much? That become how much? 13 lakh. So okay, this become what? This become sale price from X point of view and purchase price from Y point of view. Correct? But in this case, what happened? Just try to understand. Ki for these 3 months, company will pay interest on this date and company will pay interest to the holder. So after sale, who become holder? Y. Means company will pay on 31st 12 interest of 6 months to Y. But this 3 month interest belong to whom? X. Therefore, X will demand 3 month interest from Y right now. And which is genuine also. Because X will say to Y, company will pay you for 6 months. But out of that 6 months, I am holding for 3 months. You pay me 3 month interest right now. So X will demand and Y will agree also. If Y is not agreeing, then this transaction is not possible. So it will be always agreed. Understood? Correct. So no one can say no, I will not pay. So it means interest will be added for how many months? So that will be 25,000 only. So this becomes 13 lakh 25,000. 13 lakh 25,000. So this price is known as X interest price. And this price is known as cum interest price. Understood? Correct. Now there can be two type of questions. Either they will say कि X has sold at cum interest, X interest. So if they say 130 is X interest, so 130 is excluding interest only. Correct? Or they may say कि X has sold at 132.5. So this will be what? Cum interest quotation. So they will say the question can be in two ways. Either they will say X has sold debenture at rupees 130, X interest. So this means what? Excluding interest. Or they will say X has sold debenture at 132.5, cum interest. Means this is inclusive of what? Interest. Can you say whatever may be the quotation, whether the quotation is X or cum, can you say X will receive interest or not? Not able to understand. Quotation is X or cum, that is not a matter. X will receive interest or not. Whether the quotation is X or cum, X will receive interest for how many months? From whom? Understood fact. So even though quotation is X interest, it does not mean they will not receive interest. They will receive interest. They will receive interest. This much you have understood. This much you have understood. Are you able to understand? Suppose we are doing this question from Y point of view. So can you say Y has purchased the debenture? Y has purchased the debenture. So they need to pay interest for how many months? 3 months. To whom? To X. Can you say X will receive interest and Y will pay interest from last due date to the date of transaction? From last due date to the date of transaction. So whenever transaction occurred about purchase or sale, you need to find out how much interest has been paid or received. Can you say seller will receive interest? Can you say seller will receive interest and buyer will pay interest from last due date to date of transaction, from last due date to the date of transaction. Are you able to understand what I am saying? Correct. Have you understood this point? Correct. It means from Y point of view, what journal entry Y will do? Can you say Y will say investment account debit to bank. But you only say from Y point of view, how much they are paid for purchasing investment? 13 lakh ki 13 lakh 25,000. 13 lakh, not 13 lakh 25,000. 25 is the interest. Interest should be charged to PL account. Understood? It means investment will be debited with 13 lakh. But how much payment? 13 lakh 25,000. Correct? And interest will be debited. Interest will become the expense of Y. Understood? It means, can I say investment will be always debited with X interest price? Investment will be always measured at X interest price, not at cum interest price. Understood this point? Similarly, for X, what will be the sales journal entry? Can you say bank account? How much they have received? 13 lakh 25,000. But for investment, how much they have received? So for investment, they have received 13 lakh only. And the balance they have received interest income. That become their interest income. How much? 25,000. It means for seller point of view, investment will be credited at which price? X interest sale price. So whenever you are preparing investment account will be debited with X interest cost price. Investment account will be credited with X interest sale price. This is the concept. If you have understood this much, this chapter is easy, this topic is easy, otherwise complicated. Understood? Yes. Once again, student think what? Whenever the quotation is X interest, then interest will not be accounted. That is wrong. Whether the quotation is X interest or cum interest, buyer will pay interest, seller will receive interest. In this example, for how many months? 3 months. That is from last due date to the date of transaction. Understood? Have you understood? First, you have understood this much. Now I can start the entire discussion. Any doubt in this? Ask me. Okay? Now you will say me. Accounting for fixed income bearing investment on purchase of investment. What journal entry? Investment account debit. Can I say interest account debit to bank? Yes or no? Have you right now I have explained. Investment will be debited with what? X interest cost price, and interest will be debited with accrued interest, means interest from last due date to the date of transaction to bank account with the total amount paid, means with cum interest price. Got this point? For sale of investment, what journal entry? Bank account debit to investment to interest. Interest will be credited. Bank will be with cum interest price. Investment will be X interest price, and the interest will be with the interest amount, that is interest from last due date to the date of transaction. Can you say whenever there is a sale, we need to also recognize gain or loss on sale? Means we'll compare this X interest sale price with the carrying amount, and any difference will be gain or loss. So that we need to do one working note. We need to find out gain or loss on sale. For gain, what journal entry? For gain on sale, what journal entry? Investment account debit to gain, and gain will be transferred to PL. You can see investment to PL also, but investment account debit to gain on sale, and gain on sale will be transferred to PL. For loss, what journal entry? loss on sale to investment, and loss will be transferred to PL account. This journal is very simple. Correct? When interest received, can you say interest received on due date from company? Interest will be received from company on due date. So what journal entry? Bank account debit to interest income. Can you say it will be based on agreement? If it is paid after every 6 months, so 6 month interest will be received. If it is paid on quarterly basis, so 3 month interest will be received. Means can you say whenever it is from company, so company will pay on due date. So always from last due date to current due date. So company will pay from last due date to current due date. Last due date to current due date. So if it is half yearly, so 6 months, quarterly, so 3 months, annually, so 12 months, monthly for 1 month. Understood? That depend upon the information given the question. Normally they give half yearly or quarterly in exam. Either half yearly or quarterly. Understood? Correct. Once interest received, then we need to also prepare our interest account, and any interest income of the year will be transferred to PL account. Any interest income, to interest account debit to PL account. Now in this there are two main working note. One is the calculation of X interest cost price. Means for this investment will be debited with what? X interest cost price. This working note. Correct. And second, we need to find out the gain or loss on sale of investment. How to calculate gain or loss on sale of investment. These are two important working notes. Always, whenever you are calculating X interest cost price, I will say always start with cum interest cost price. Even though quotation is what? X interest. Means always use this format. So start with cum interest purchase price. From this we deduct interest paid from last due date to the date of purchase. That we can calculate. So that become X interest cost price. This become X interest purchase price. In this we'll add all the expenses incurred for purchase. For example, brokerage, any securities transaction tax, any stamp fee fees, means whatever given. So any expense on purchase will be added. Any expense on purchase will be added as per the information given the question. So this become X interest cost price. Understood? So always start with cum interest purchase price. Even the quotation is what? X interest, because in any case you need to calculate interest. Understood? Means if this is given, so you start from this, then also you need to calculate this. What is the interest paid? Are you able to understand? So even the quotation is X interest, use this format. Start with what? Cum interest, then minus interest paid from last due date to the date of transaction. Then that become X interest. Then add all the expenses of purchase. That become X interest cost price. Understood? Now, if there is a sale of investment, here also always start with cum interest sale price. From cum interest, first we deduct interest received from last due date to the date of transaction. So for purchase interest paid, for sale interest received. So any interest received will be deducted, and that will become X interest sale price. X interest sale price. Understood? From this you deduct any expense on sale. So any expense on sale, brokerage paid, any security transaction tax paid, means whatever expense paid on sale that will be deducted. So that will become net sale proceed. Net sale proceed. From that you deduct the carrying amount of investment sold. So carrying amount of investment sold we should deduct. So the difference will be gain or loss on sale. So these two become two important working note in which, on the basis of which your solution will depend. Now whenever I am saying carrying amount of investment sold, so it is quite possible you purchase 1 lakh but you are selling only 20,000. So it means you need to find out average cost price of assets sold. So what our AS 13 says that this carrying amount of investment sold will be calculated by using weighted average cost price method. Weighted average cost price method. Understood? Understood. So if the question is silent, always calculate carrying amount of investment sold by using weighted average cost price method. But if the question specify, then we need to use FIFO also. So sometimes question says that calculate gain or loss by using FIFO method. So if question says FIFO method, we need to apply FIFO method. So I will say either weighted average or first in, first out method. But if question is silent, then follow what? Weighted average cost price method. Understood? So this I need to explain that how to find out carrying amount of investment sold by using weighted average cost price method or FIFO method. This I need to explain. Have you understood this point? Correct? Any doubt? This is the entire discussion. Let me take one question to explain that. Chalo, I'll take this question. Question 7. The following information is presented by Mr. Z, a stockbroker, relating to his holding in 9% central government bonds. Opening balance 1,20,000, cost rupees 1,18,000, nominal value of each unit is 100. On 1st March 2001, purchased 200 units, X interest at 98. On 1/7 sold 500 unit X interest out of original holding at rupees 100. So sold at rupees 100. On 110 purchased 150 at 98 come interest. Now they have given come interest. On 111 sold 300 units X interest at 99 out of original holding. Interest data 30th September and 31st March. Mr. Z closes the books every year on 31st December. Means year end is what? 31st December. So the investment account as it would appear in the books, but by using which method? FIFO method. So what I will do from the same question, first I will do weighted average method, then I will do FIFO method. So you will understand what to do in FIFO method, what to do in weighted average price method. Understood? For this, I will suggest that whenever this type of questions come now, my suggestion that draw timeline, because normally students do not understand number of months only. So I will suggest that when you are reading the question, that moment you start drawing timeline. Okay. So let us draw the timeline. So this is 1st Jan. This is 31st 12. What was the opening balance? How many investment they have? Cost price how much? Cost price is nominal value is 1,20,000. Nominal value is, and cost price is how much? Cost price is 1,80,000. 18 na? 1,18,000. What is the rate of interest? 9%. Understood. This you have written. Then they give due date. What is the due date they have given? That you identify. So 31st March will come यहाँ पर, and 30th September will come somewhere यहाँ पर. This is very important. And give one gola. Gola means this is due date. Understood? So that you can identify this is due date. Okay. Then identify all the transactions. The first transaction is given on which date? On 1st March. So 1st March will come यहाँ पर. 1st March. 1st March में they have purchased how many units? 200 units at 98 X interest write down. X interest write down. Understood? Correct. Then second transaction done on which date? 1/7. 1/7 will come somewhere यहाँ पर. So on this date what happened? Sold. How many units? 500 at 100 at X interest. This is very important to understand. X or come. That's it. There is nothing. Always original holding only. Because first in first out method na. So first will be always original holding. But right now that forget, because we are doing weighted average as well as FIFO. ठीक है ना? Then what next? Next transaction, third transaction, 110. 110 will be somewhere यहाँ पर. अच्छा 30th September. Next day is only what? One day. So you can add on here only one day, 110. Next day is only 110 na. But what happened? Purchase. How many unit? 150 unit at 98. Come interest. Okay, sir. The next is what? 111. They have sold how many unit? 300 at 99. X interest. Understood? Correct. This is the entire information. First you draw this. It will take 2 minutes. If you will not draw it, you need to think everything in your mind. That is more dangerous. Okay. Now you need to say कि at this point of time, at this point of time, at this point of time, can you say they will either pay interest or receive interest? So for how many months? Then you need to identify. If you have identified that correctly, then solution is very easy. Okay? Understood? तो बताओ 1st March, what was the last due date? Last due date will be 38 September. Very good. So this how many month? 5 months. So in these, the investor will pay interest for how many months? 5 months. Here, what is the last due date? 31st March. So 31st March to 17. So it means 3 month interest. Okay. Understood. Here, batao. In this purchase, for how many months? Huh? 30th September is only the due date and 1st October. So 0 month. 0 month. Dekho, they have given come interest to confuse you. It is 0 month interest. Yes or no? Last due date is 30th September. One day interest you will not calculate. Huh? It is 0 month. Maybe don't try to think much. What I am saying, interest paid or received from last due date to the date of transaction. What is the last due date? 30th September. Means up to 30th September that investor has already received all the interest. So what is the question now? Nothing. Okay, na? Now sale happened to 111. So from 30th September to 111, how many? It is 1 month. 1 month. This 111 is very much confusion. Huh? So think 10, then 11 don't count. Okay, this is clear. Once you have done this, okay. Understood? Correct. Can we start? Now first what we'll do? First working note what we'll do? Calculation of X interest cost price. X interest cost price. So we have two purchase on 1st March and 1st October. Correct. So on 1st March and 1st October. Understood. But what is the nominal value of debenture? Na? Debenture purchased. What is nominal value of debenture purchase? Correct. Nominal value. So what is the nominal value? 100. So it means can I say 200 into 100? 200 into 100, 2 lakh. 20,000. Okay. And on that 110 what? 150 into 100? 15,000. This you just close it. Okay. Understood. Then add on. Then whatever the quotation is given right now, forget. Then one format I am giving that you write down. First write down. Come interest. Always write down this format. You will never do mistake. Come interest purchase price minus interest paid. This will be X interest purchase price. In this we'll add any expense on purchase, and this will become X interest cost price. Understood? This is the format for any question. Don't change this format. Don't change this format. Any question, write down this format only. Okay? You'll never do mistake. Got this point? Now, let us start the solution. Now, for the first purchase, the quotation is given X interest or come interest. So, we'll do 200. Here we write down 200 into, what is the quotation? So 200 into 98 na. So X interest. How much X interest price? 19,600. Understood. And interest will be calculated for how many months? 5 months. But the interest will be calculated on 19,600 or 20,000. So be careful. Here normally students do mistake. If you don't write 20,000, you will calculate on 19,600. And therefore always write down first nominal value. Therefore you will never do mistake. ठीक है ना? तो बता 20,000, what is the rate of interest? 9%. For how many months? 5 by 12. How much? 750. Correct. Can you see you can now calculate come interest price even though not required, but you can calculate or not. This plus this will be how much? 20,350. Understood. Can you say expense on purchase not given nil in this question? So your X interest cost price will be 19,600. If they have given expense on purchase, brokerage, stamp duty, that also you add, and that will become your X interest cost price. Understood? Bolo. Understood? Understood why we have added back calculation. Now can you do 110 by your own? 110 X interest come interest. X interest come interest quotation. First find out from the question. Come interest. So come interest is what? 150 into 98 how much? That on 150 into 98 how much? 14,700. Understood? Then interest for how many months? 0 month. So nil. Nil. So what is your X interest? 14,700. What is expense? Nil. So what is your X interest cost price? Understood the calculation. This is the best way to do without applying mind. You'll never do mistake. Foolproof method. Now let us come to sale. These two working note do first, then come to ledger account. Ledger account afterward. First do these two working note. Okay? Then working note number 2 is what? Calculation of gain or loss on sale. So what are the two date? 1/7 and 1/11. Can you give me the nominal value of investment sold? Give me now 500 units, 5,000, no? 50,000. 50,000. Then 30,000. So first you have written this, just close it. Because this will not be added and deducted. Now use the format, whatever format I am writing, that always follow. First write down come interest sale price. Then from this minus interest received. Received na? This will be your X interest sale price. From this minus expense on sale. This will be net sale proceed. Correct? From this minus carrying amount of investment sold. This will be gain or loss. This is the format in every question. Understood? Whatever question, this is the format. Don't change the format. Understood? Okay. Now, done this much? Now 1/7, what is the quotation? So X interest, come interest. So write down in X interest sale price 500 into 100. So it is 50,000. Batao. Interest will be for how many months? 3 months. 3 man. On this 50,000, on this 50,000. Means on nominal value or on X interest sale price? Nominal value. In this both are same. Okay, na? So don't be confused. So 50,000 into 9% into 3 by 12. How much? 1125. Understood. So this plus this how much? 51,000. However, this is not required. We are just completing our working note. This is not required. We require only 1125. But suppose if we start from X interest, now you will forget about interest calculation. So you need to also calculate interest, whether X or come. Now expense on sale is 0. So net sale profit is what? So they can give some brokerage, etc. that you deduct. So in this, that is not given. Correct. Now this we need to find out. This I need to explain from ledger account. This abhi right now don't think. Okay, this I need to explain. Then come to the 111. X interest, come interest. How much? 300 at how much? Interest for how many months? 1 month. On which amount? So 30,000 into 9% into 1 by 12. How much? 225. So what is the come interest? 29,000? One person say, you are saying both, one is female, one is male. Both frequency are different. So both frequency are different. I am not able to understand to catch whom. ठीक है ना, accident हो जा रहा है. The expense on sale is what? Nil. This is 29,700. And leave it right now. Because right now you can't calculate gain or loss. Gain or loss you can calculate after preparing ledger account only. ठीक है? So right now here leave it. And we'll now start preparing our ledger account. Can we start? Now we'll prepare investment account. Investment account in 3 column. You have done 3 column, na? Why we do 3 column, you know? Huh? Why we prepare in 3 column, you know? Well, why we prepare in 3 column? Achha, what are the 3 column? First column, what we write? Nominal value. Then we write down interest. Then we write down amount. Why we prepare 3 column? Huh? As per ICA solution. Not as per our convenience. ICA is doing in this way. Therefore, we are doing in this way. And every teacher is doing in this way. Understood? There is no such rule. Have you seen any time account in 3 column? Never. It is only as per ICA solution. Means in this actually we are preparing 2 accounts. One is interest account, one is investment account. But 2 accounts should be in 2 different format, na? So this is as per ICA solution, and we are following ICA solution. Chalega? And one will be date column also. So date column also write down. Can we start? Don't worry, I think in exam you are getting broad, na? It is given in rectangular shape. Acha, now they have changed, na? Yeah. So you can do like that. They will not deduct marks. Okay. You want to do Abhi, right now I'm not for that. Arre, they will correct. Arey bhai, you can do it in exam if you have understood. First, now you go to output. You don't think about process. Means you think about always output. What I will do. First, how we will do, Ray? Correct. Don't go to output directly. First, process it. Process is more important than result. Result is an outcome of what process. Okay. Chalega. I mean, right now, don't think about exam. Exam will be there and you will pass. Process is more important. Okay. Chalo. Now, listen. Where you can do mistake. That I need to identify. What is the first opening date? 1/1/2000. What is the year? 2001. You write on 2 balance brought down. What is the opening balance? 1,20,000. And what is the cost price? 1,18,000. ठीक है. बताओ. Will you calculate anything? Will you write down anything in interest? Yes or no? Yes or no? Yes. So here chances of mistake will come. Yes, we need to write down. Just try to understand कि if you see this, so this is the opening balance, means last year closing balance, and last year you have not received interest for how many months? 3 months. So last year you have calculated one accrued interest. So last year closing accrued interest will become current year opening accrued interest. Understood? So there is one opening accrued interest for how many months? 3 months. Even though question will not say it is implied point. Correct? So can you say last year 3 months interest was not received? So that will be receiving current year. So that you need to account for now. That you need to account for. So 3 month interest will be calculated on which amount? On which amount? On 1,20,000. The 1,20,000 into 9% into 3/12 is equal to 2,700. I have seen student do mistake यहीं पर. This is danger. So be careful. Be careful. Now we'll go date wise. First date is what? First date is what? First date is 1/3. So 1/3 में what we have done? Purchase. So we have done 2 bank. But what is the nominal value of investment purchase? 20,000. What is the interest we calculated? In the working note. Everything from working note. Everything from working note. 7. And what is the X interest cost price? 19,600. Understood? Have you understood? Correct? Achha, this 19,600 is which amount? Is this amount or this amount? Are you getting? First one ki second one? First one ki second one? Because I know where you can do mistake. How many are saying second one? How many are saying first one? The first one is 100% wrong. Nothing to love. Please, please, please. Please, everyone is same. Nothing to love. We are calculating the investment will debited with X interest cost price, not purchase price. This is what? Purchase price. We want what? Cost price. So this, and therefore we are calculating. Normally I have seen student do mistake here, but they will take this amount. I don't know why. There's small mistake. We know, we have practiced, but in exam will do mistake. Okay, sir, 19,600. In this both are same, so doubt will not come now. But in the other question, both will be different. Okay? Chalo. So first you have understood. Now come to the second point. After that, what is the date? Very good. 31st March. So interest will be received. You write down by bank. But the interest will be received on 1,20,000 plus 20. So it means on 1,40,000. For how many months? For how many months? Everyone is not responding. When I'm asking, respond. Okay. I am not only for one person now. I am for everyone. 6 months. It will be 6 months because company will pay always for 6 months. If it is half yearly interest, so 6 months. Okay. How much interest? So this will come in which column? 6,300. Understood this. Then after this, what is the date? 1/7. So there is a sale by bank. But what is the nominal value? See the working note. Working, please see the work. Now no question. Working note. Working note, huh? Working note. 50,000. 50,000. What is the interest? Working note. Working note, okay. 1125. And this amount will be credited with net sale proceed. Net sale proceed. What is the net sale proceed? Whether this 50,000 or this 50,000. Last one. So investment account will be credited with this amount 50,000. Understood? So minus यहाँ करेंगे 50,000. Okay. Understood? But now can I say we need to also record gain or loss? Gain or loss. So I will explain both FIFO method as well as average method. FIFO method as well as average method. If it is average method, then very simple. You should do balance. You should find out the amount column balance. So how much amount? 11. It is what? 1,18,000 plus 19,600. How much it is coming? This I am calculating now. So 1,37,600. Understood? 1,37,600 divided by total nominal value. Nominal value is what? 1,20,000 plus 20. How much? 1,40,000. So this becomes average cost price multiplied by nominal value of investment sold. What is the nominal value of investment sold? So nominal value of investment sold is 50,000. So this will be the average carrying amount of investment sold by using weighted average cost price method. This is not FIFO method. How much it is coming? 49,143. Understood? So there is a gain. Gain how much? 857 is the gain. Understood? Chalega. 857 is the gain. Have you understood this carrying amount? How to calculate? Okay. So 857 gain. Gain, what is the journal entry? Investment to PL. So you write down on 1/7. You write down 2 gain transfer to PL in amount column. Amount column how much? 857. Understood this point? Have you understood this point? Then next transaction is what? Then 30th September. So again we receive interest by bank on what holding? So 1,20,000 plus 20, but how much sold? So whatever sold on that will not receive any interest. So this will be at 1,40,000 minus 50, how much? 90,000 into what? 9%. For how many months? 6 months. Batao. 4050. This is the very simple. Correct. Correct. After that, what is the date? 110. 110 purchase. But the two bank, what is the nominal value purchase? 15,000. What is the interest paid? Interest paid. 0. Nil na? Nil. Then what is the X interest cost price? 14,700. Done. This also done. Now coming to last transaction. What? 111 will come यहाँ पर. तो buy bank. What is the nominal value of investment sold? What is the interest received? 225. What is the net sale proceed? 29,700. Understood? Correct. Again, we need to find out what? Gain or loss. So again, we need to fill this. So what is my suggestion? You need to find out balance of means before this transaction, before this sale, you need to find out balance of amount column. Balance of amount column. So what you should do? This plus this plus this plus this minus this you do. Because this has been sold also, na? This has been sold also. So balance of amount column, this plus 857 plus 14,700 minus 50,000. How much? 1,03,157. 1,03,157. Okay. Correct. Similarly, divide by balance of nominal value column. Means these plus this minus this 50,000. 1,05,000. So this become average cost. Multiply by nominal value of investment sold. How much sold? So multiply by 30,000. Understood? Have you understood this calculation? Now, first, have you understood the calculation? Amount will come because you have calculator. Amount I am not at all, I am giving importance. Have you understood this calculation part? Now give me the amount. 29,473. What is the gain? 220. 227 is the gain. $227. Understood? We write down gain on 111 to gain transfer to PL. How much? 227. Done. Now we'll come to the closing balance. So we need to close the account now. We need to close the account. So can you give me buy balance brought down? So on 31st 12 we'll do buy balance carried down. Acha, sorry. 227, my mistake. 227, thank you. But the buy balance carried down. What is the nominal value balance? 75,000. And what is the amount column balance? Amount column, not interest. 1,53,000. 73,684. 73,684. I don't have space to write down properly. 73,684. Understood? Correct? Understood? This is the closing balance. Understood? Now can you say for the closing balance also we need to find out accrued interest, because we have received interest only up to 30th September. 3 month interest is not yet received. So that will be accrued. So we need to accrue interest for how many months? 3 months. This is the implied point. Normally student will forget this. So 75,000 into 9% into 3 by 12. How much? 1688. Have you understood this point? So opening interest and closing interest is implied point. Opening investment, opening interest. Closing investment, closing interest. For what? For the period for which interest has not been received. Understood? Correct. Now can you close interest account? And can you give me what is the balancing figure of interest account? That will be transferred to what? PL account. How much? 9,938. This will be transferred to PL account. Done. Understood? High level of concentration required, but this is weighted average cost only. There are two ways. Your teacher might have explained that way. I explained that way. This is, you find out that will come same amount. I know what you have done by your previous faculty. Just calculate it, same amount will come. Just calculate it. Understood what I am saying? So I think they have not given you that gain or loss wala tarika. So I am following ICA solution. You just calculate it, your answer, just calculate, check. Any doubt? Any doubt? More? Are that to next point now. This Rukja, I'll complete. I have completed everything, Ray. Why I will leave that? That is variable income. I am right now in fixed income. Now, in this last point, this much you understood? FIFO I need to explain, but before explaining FIFO, suppose they have given the market price of the debenture. Suppose they have given in the question, they have not given कि on 31st 12 market price of debenture is 80 rupees. Suppose they have given. So it means we need to find out cost price or fair value which is lower, because this will be always assumed to be current investment. So can I say cost price of 75,000 nominal value investment will be this amount 73,689. This is the cost price. This is the average cost price, and market price will be 75,000 into 80%, we can say, because it is, if the nominal value is 100, so it means, can I say it become 80%? Yes or no? Or you can do 80 by 100, means first find out, or you can do in this way, is 75,000 nominal value. Now first find out nominal number of debenture. So divide by 100 into 80, do same thing will come. Either do 80% or you do 80 divided by 100. How much? 60,000. It means, can I say here the value will become what? 60,000. It means how much reduction? How much reduction? 13,689. So this will be transferred to what? PL. So what general entry will do? PL account debit to investment. So it means one more post will come. Will go by PL. By PL. And how much will charge? 13,689. And your closing balance will become how much? Your closing balance will become 60,000. Understood? If suppose they have given market price, they may give. Understood what I am saying? If market price is not given, we'll assume market price is more than what cost price, and there is no reduction. So if suppose they have given market price, this is the last working note we'll draw. We need to find out cost price or fair value, whichever is lower. Any reduction will be charged to PL account. Any reduction will be charged to PL account. Journal entry is what? PL account debit to investment. So investment reduced by that written down value. Understood? Correct. Now, if suppose the same question they have given for what? FIFO. So if they have given same question, so guys, this gain will change. Only what will change? Gain will change. Are you able to understand what I am saying? Gain will change. Balance will remain same. Means this amount will change, this amount will change. So you don't delete. You can add on separately. Are you aware? Suppose the FIFO is given. So how to work out this carrying amount of investment sold? So can you say the first sale was done at this point of time? 50,000. So this will be from this lot. First lot. So it will be 1,18,000. So what will do? Our formula will be what? For this. Only first lot 1,18,000 divided by 1,20,000 into what? 50,000. So what is the? Huh? 49,167. So what is your gain? 833. So your gain changes only. Other posting remains same. Other posting remain same. Understood? Correct. Now, for this, the next sale, can you say out of 1,20,000, how much sold? 50,000. How much remain? 70,000. Again, they have sold 30,000. This is from this lot only. Same lot. Are you getting what I'm saying? Once again, the same 1,18,000 divided by 1,20,000 into 30,000. You can find out. If suppose, just try to suppose this is not 30,000. Suppose this is 90,000. So can you say it means this 90,000 will be first from this lot to the extent of how much? 70,000. And balance will be from which lot? This lot. So you need to do two calculations. 1,80,000 divided by 1,20,000 into 70. Then 19,600 divided by 20 into 20. The sum total will be the carrying amount of investment sold that you can add on yahan par and you can find out gain or loss. FIFO is more easy, I will say, to understand. But FIFO will be applied only when specified in question. If question is sent, always apply what? Weighted average. Understood? All points I have covered. All points I have covered. Fixed income bearing investment is this much only. Understood? Have you understood? Have you understood this format? This format don't change. If you have understood this calculation, you will do all question correctly. All question correctly. Chalo. Now let us come to next point. Next point is what? For variable income bearing investment. Variable income bearing investment. Now variable income, normally they will give equity shares. Normally they don't ask preference shares. I think only one exam they ask preference shares. Now when I say equity shares you purchase, whether there is any due date of dividend. There is no due date of dividend. Dividend can be declared or may not be declared. And therefore, in this, will not calculate any cum dividend, ex dividend. Means there is no calculation of that. However, there is a concept of cum dividend, there is concept of ex dividend, but will not calculate that. Because can you say we don't know due date? If you don't know due date, can you calculate it? You can't calculate it. Got this point? So whenever you purchase the investment, journal entry is directly investment account debit bank with entire cost price. And whenever you sell investment, bank account debit to investment with the net sale proceed. Means here the calculation is very easy because there is no interest calculation yahan par. Understood? And once again, if there is gain on sale, investment account debit to PL. If there is a loss on sale, PL account debit to investment. Means to calculate cost price, the formula is very easy. First calculate purchase price of investment, whether cum dividend, ex dividend. Suppose they have purchased at cum dividend, they have purchased at ex dividend, it is not at all relevant. Not at all relevant. So take whatever quotation has been given and add only all the expense on purchase and this will become cost price. This will become cost price. Understood? Similarly, when we need to calculate gain or loss on sale of investment, first take sale price, whether X quotation come, however they will not give in sale price. From this deduct expense on sale, this become net sale proceed. From this minus carrying amount of investment sold. Normally for investment in equity share, they always give average method only. Till now they have not given FIFO method. FIFO method they give only for investment in fixed income bearing investment. So here normally they will give average only. Understood? To find out average cost price and this will be gain or loss on sale. Now there are three important concepts. First, already we have done pre-acquisition dividend and post-acquisition dividend in consolidation chapter. So whenever there is a pre-acquisition dividend received, what is journal entry? Bank account debit to investment. So it will be deducted from the amount column, But whenever there is a post-acquisition dividend received, that will be transferred to your dividend income, and from dividend income it will transfer to PL. So bank account debit to dividend income. This is super easy. Super easy. Understood? Now, how to understand it is pre-acquisition, post-acquisition? How to understand it is pre-acquisition, post-acquisition? So from examination point of view, there is some rule. There is some rule. Correct? If it is opening holding, if there is an opening holding, so and this is final dividend, it can be final dividend, interim dividend. So for opening holding, final dividend will be always post. Final dividend will be always post, and interim dividend will be always post. Opening holding, you understood? Means suppose they say in this way, कि opening number of shares was 1 lakh. They were holding 1 lakh equity shares, means they have already acquired it in last year, and now they have declared dividend यहाँ पर. So for these, always this will be post-acquisition dividend. You can't assume it is pre-acquisition dividend, whether it is interim dividend or final dividend. But any shares which was acquired during the year before declaration dividend, means if you acquired some share during the year before declaration dividend, so that shares is also entitled to dividend. That shares is also entitled to dividend. So if it is final dividend, we'll consider it as pre-acquisition dividend, because of course final dividend is paid for previous year, and that shares is acquired during the current year. But interim dividend will be always assumed to be post. Interim dividend will be always assumed to be post, because interim dividend is for which year? Current year. So this is general assumption. This assumption will only prevail. So for opening holding, what? Post. For shares acquired during the year, it is pre-post. Okay, sir. Now coming to bonus shares. Bonus share already we have done in consolidation chapter. So but for investor, when bonus share receive, what journal entry? No journal entry. No journal entry. Only the number of shares will increase. Number of shares will increase in the number of shares column. Okay, only this much. Correct. Now in this bonus share, there is one popular question they have asked many times. Means I will say this is the favorite question of the institute. Question 9. Favorite question. Can we do this? On 1st April 2001, Mr. Krishnamurthy purchased 1000 equity shares of rupees 100 each in Telco Limited at the rate of rupees 120 each from a broker who charged 2% brokerage, and he incurred 50 paise per 100 as the cost of share transfer stamp. So there are two costs, 2% brokerage and 50 paise, means 0.50%. 0.50%. On 31st Jan 2002, bonus was declared in the ratio 1:2. Before and after the record date of bonus share, the shares were quoted 175 per share and rupees 90 per share respectively. Means before bonus share, what was the price? 175. After bonus share, what is the price? 90 rupees. Normally after bonus share, because number of shares will increase, the market price will decrease. Considerably it will decrease. Okay. On 31st March 2002, Mr. Krishnamurthy sold all the bonus share to a broker who charged 2% brokerage. So investment account. Understood? Correct. In this, there is no dividend, so there is no need to prepare dividend column. So we will prepare two columns, number of shares and amount. Number of shares and amount. Can we do? So we will prepare investment in equity shares account. Okay, first, what is the date of purchase? It is 1st April. So 1st April, what journal entry? Two bank. How many shares they have purchased? They purchased 1000 equity shares. 1000 equity shares. At what price? So we need to do one working note. Of course, we can do in calculator also, but in exam, prepare one working note. It is 1000 into 120 plus 2% brokerage plus 0.05% stamp duty. Can you give me the amount? What is the amount? Bolo. This much time. But the 1,20,000. What is the 2%? 2,400. And what is 0.5%? 0.05%. 50 पैसे ना. बोलो. How much is coming? 0.05% of 1,20,000. 0.05% is 60 rupees. 1,20,000. So 50 paise, 0.5. Sorry, 0.50%. My mistake. 0.50%. This is 50 paise for rupees 100 na. You do in this way better. 1,20,000 into 0.50 divided by 100. Now calculate. Okay. Better you calculate in this way. 600. It will be 600. It is 1,23,000. So 1,23,000 came. Okay. So your cost price is what? 1,23,000. Okay. Then on which date they have given bonus shares? On 31st Jan. So 31st Jan, what is the bonus number? So we had bonus shares. How much? How much bonus shares? For one? For two, they have given one bonus share. For two equity share, they have given one bonus share. So it means 500. So 500 bonus shares will increase, but amount of bonus shares will be 0. So we are not passing any journal entry. Yeah? This is only for adding bonus share in number of shares column. Okay. Understood. Now on which date there is a sale? Sale has been done on which date? On 31st March, they have sold. So on 31st March, they have sold all the bonus shares. So by bank, they have sold how many shares? 500. Correct. At what price? At what price they have sold? To 500 into 90. 175 to 90. No. Whichever is lower, not. Before bonus share, what was the price? After bonus share, what was the price? So it is sold after or before bonus share? That is the price. Don't say whichever is lower. Huh? Not whichever is lower. It is 90. Understood? 90. So it was sold at rupees 90. So 500 into 90. And brokerage is what? 2%. So minus 2% to 44,000. 44,100. Now we need to find out gain or loss on sale. Gain or loss on sale. Okay. So बताओ, what is the net sale proceed? 44,100. And we need to find out carrying amount of investment sold. Correct. Now they have sold bonus share, but the carrying amount of investment sold will take how much? What will be the carrying amount of investment sold? Means you are saying we will calculate average cost na? Average cost. So okay, you are correct. It is 1,23,000 divided by 1,500 into what? 500 is equal to 41,000. So what is the gain? 3,100. So this gain will be transferred to PL. Write down 3,100. Then write down by balance carried down. How much number of shares? 1,000 left. But this will be at cost price or market price, whichever is lower. So right now market price is 90 rupees. So we need to compare once again. So can you give me what is the cost price coming? Cost price means amount column balance. This plus this minus this. This plus this minus this. How much it is coming? $1,23,000 plus 3,100 minus 44,100. 82,000. The cost price is 82,000. The market price will be how much? 1,000 into 90 na. That is 90,000. Whichever is lower, we will take lower only. Therefore, there is no reduction. So there is no reduction. And therefore, it will value at what? 82,000. And this is the final answer. This is one popular question, have been asked many times for 5 marks, 6 marks, like this. Perfect question for 5 marks. Correct? Okay. Understood? Chalega. The last point is about right shares. Right shares. Now what AS 13 says that, of course, right shares you know. So right shares might be declared by the company. So investor will receive some right shares. Correct? So when a company announces right, so a right is given. Means suppose you are my equity shareholder. So I have given a right. What is the right? That you can purchase some equity shares at a price which is lower than market price. Suppose I have given a right that you can purchase 1000 equity shares at rupees 20 rupees, at rupees 20. Correct? But it is quite possible you don't want to purchase. It's quite possible you don't want to purchase. So you can transfer your right to your friend and relative as per Companies Act. Means whatever right I have given to you, means company has given to you, that right you can transfer, not right shares. I am saying I have given a right to you that you can purchase a number of shares at rupees 20. Now you don't want to purchase the shares. So you will transfer the right to your friend or relative. So you will not transfer it free of cost now. So you will transfer at some consideration. So there are 2 points. Either you will purchase or you will transfer the right. Understood? So either you will purchase. If you purchase, then it become your investment. Then journal entry is investment account debit to bank at cost price. So if you subscribe the right shares, then it is your investment, then investment account debit to bank. But if you transfer the right, then whatever consideration you are receiving, can that become your income? That become your income. Means some right you have transferred at some consideration, that become your income. So that income will be transferred to profit and loss account. You will pass one journal entry bank account debit to profit and loss account. So when the right are not subscribed but are sold in the market, then your journal entry is bank account debit to PL account. Understood? Have you understood? Correct. Now it is quite possible they may say in this way, 1000, 50% they have subscribed and 50% they have sold. So it means 500 shares you will 500 shares you will purchase and 500 shares right you will transfer. So both entry will come. So this entry will also come, this entry will come. My question to you all, when you pass this journal entry, it will affect which column? Now it will affect dividend column or amount column. This will affect amount column. But when you pass this journal entry, it will affect which column? Dividend column or amount column? Okay, no effect, because it is what, neither dividend nor investment. So it will not affect any column. Only you should write a note in your solution. It is a sale consideration from transfer right, which will be transferred to profit and loss account. Understood? Correct. Let me take one question. वही तो बोला. Let me take question. I've already said that, but let me take question. Chalo, one good question I am taking. Chalo, question number 12. This type of question normally they ask for 8 marks, 10 marks, sometimes 12 marks, but now 8 to 10, not more than that. On 1/4/2001, Sundar had 25,000 equity shares of X Limited at a book value of 15 per share, nominal value 10. So I'm explaining from this account only. Chalega? So investment account we are preparing. So they have not done dividend column. Can we write down dividend column also? They have not given dividend column. But in exam you prepare dividend column. Okay? No need, but then also prepare, because they are preparing. In this solution they have not prepared. ठीक है ना? चलो ठीक है. So you will be able to understand ना? So can you say how many shares they purchase? 25,000. What is the cost price? 25,000 into 15. How much? 3,75,000. Done. Done. Then on 20th June, he purchased another 5,000 equity shares of the company at rupees 16. What is the investment account debit to bank? So number of shares will increase by 5,000 and 5,000 into 16, how much? 80,000. So 80,000 will come. Okay, done. Then the directors of X Limited announced a bonus and right issue. No dividend was payable on this right issue. Okay. The terms of issue are as follow. Bonus 1:6. So how many bonus shares? So you are holding 25 plus 5. 30,000. 30,000 divided by what? 6. So how much bonus shares? 5,000. What is the journal entry? No journal entry. So you write on 2 bonus shares. Only which column? Amount column will come? Nothing. Understood? Then what they have given ki right basis 3:7, date is itna, price 15 per share, due date of payment is 30th September. Shareholders were entitled to transfer their right in full or in part. Accordingly, Sundar sold 33.33, means one third. One third of his entitlement to Sekhar for a consideration of 2 per share. Means first you need to say what is the total right share they have received. So can you say number of shares 25 plus 5 plus 5, how much? 35,000. 35,000 no? Into 3 by 7, how much? 15,000. Out of that, how much transferred? One third. 5,000 they have transferred. Means how much they have purchased? 10,000 they have purchased. So they have purchased at what price? 15 rupees. So what will be journal entry? Investment account debit to bank. 10,000 into 15. Correct? So it is to bank 10,000 into 15, 1,50,000. And can you say for this how much consideration they have received? 5,000 into 10. Sorry, 2. So what is the amount? What will be journal entry for this? Bank account debit to PL account. It will not be posted in investment account. Just write a note in exam. This will be transferred to profit and loss account. Done. Then dividend. Dividend for the year ended 31st March 2001 at a rate of 20% was declared by X Limited and received by Sundar on 31st/10/2001. Dividend for the shares acquired by him on 20th June are to be adjusted against cost of purchase. Normally this is given in the question. Normally it is not given. You need to understand by your own whether it is pre-acquisition dividend or post-acquisition dividend. So batao, can you say, just try to understand, can you say this is 25,000, 5,000, 5,000, 10,000. These are the number of shares which we are holding before the date of dividend. So on this 25,000, how much dividend will be received? 25,000. What is nominal value? 10. What is the rate? 20%. How much? 50,000. Correct? So on 25,000 we receive 50,000. On this 5,000 how much we receive? 5,000 into 10 into 20%. How much? 10,000. On this 5,000 how much we receive? 5,000 into. Okay, correct. Now just try to understand. This is final dividend paid in current year. So final dividend has paid for previous year. So this bonus shares and right shares will not be entitled to any dividend of last year. But if there is some interim dividend, then it will be given to bonus shares and right shares. Understood? Be careful. It might be a question of interim dividend also. ठीक है ना? So of course they are not entitled to any final dividend. Understood? Correct. Now this 50,000 will be pre ki post. So on opening holding already I have said always it is post. But on 10,000 it is pre ki post. So this will be pre. So can you say this will be this journal entry will be at bank account debit to investment. So you can see they have done 10,000 deduction from amount column. But this will be transferred to PL account because we are not prepaying dividend column. Therefore they have directly written in the notes to account. This will be transferred to PL account. Understood? So only journal entry of 10,000 will be done in investment account. So 10,000 done. Chalega. Then next point what they have done, on 15/11 Sundar sold 25,000 equity shares at a premium of 5, means at rupees 50. 10 plus 5 is 50. So they have sold at itna. So 25,000 15 how much? So by bank 25,000, 3,75,000. But you need to find out gain or loss. So for gain or loss, I will say what you will do. This plus this, all this plus minus what? 10,000 minus 10,000 na? Because that is deducted from cost price of investment. Normally student miss this point. You need to find out balance of amount column. Balance of amount column. So this plus this minus this, how much? 5,95,000. Divide by number of share, 25 plus 5 plus 5 plus 10. How much? 45,000 into how many? 25,000 sold. What is the carrying amount? 3,30,000. 555. So what is the difference between these two? So 44,000, 445, yeah, 444. Some approximation difference there. So same gain is coming. This gain will be transferred to profit and loss account. Now we need to what? Do closing balance. The closing balance will be this and this. Because once again they have not given market price, so we are not able to compare it. If they give market price as on year end, then compare this cost price with market price. Any deduction will be charged to profit and loss account. Understood? One this type of question they ask. Okay. One I have seen in recent days, now they are asking this type of questions. This type of question in which they will give fixed income also, variable income also. So if you know, you can do it. The recent time I have seen in the last 5-6 years, the trend is for this. They are asking, means whenever they are asking 12 marks question from this chapter, so they will give both. Rare chances, but they can give. So if you know this, you can do it now. Okay. So this you can practice by your own. My help is not required. So from my point of view, AS13 is completed. Correct. Now balance question, my job is less. I have covered all the point, but then also I will like to explain one point. This can be asked in exam. What actually they say for right shares? The sale of right is given now. So you can see there is one attention wala point. This I have not done, but I think can be asked. What they say? When the investment are acquired on come right basis and the market value of investment immediately after becoming X right is lower than the cost of which they are acquired, it may appropriate to apply the sale price of right to reduce the carrying amount of such investment to the market value. Have you understood anything? Have you done this point? Means what they want to say. Suppose, just try to understand. Let me explain you through conceptually. Then only you will understand this point. Suppose initially you purchase 1,000 equity shares. Correct? 1,000 equity shares. Correct? And on this date, right was announced. Right was announced. So just try to, the right was announced by the company, but till now right shares was not declared. It was announced. Can I say once it is announced, suppose announcement is that if you are holding 2, you will be given 1 right shares at rupees 15, even though the market price is 50. This was the right announced. So once the right will be announced, the market price will increase or decrease? Because can you say now if I will purchase the shares from the market, then with that shares I will get right also. Means if you are the seller, so you will not sell me now. And if I will ask you to sell, you will demand higher price. So automatically the price in the market will increase. Means initially the market price was X right. Suppose the market price was X right, means excluding right was 50. So once the right will be announced, the market price will increase and this market price will become come right. This market price will become come right. Now suppose the market price become 55. It means 50 is for shares and 5 rupees is for what? Right. So there are two things. If suppose I am purchasing any shares in the market after right announcement, so I am getting shares, and with shares I am getting right to purchase additional share. Are you able to understand? Correct. Why I am explaining this? When you will come to CA final, we will do this type of discussion. Correct. So CA inter normally most of the teachers don't ignore this thing. But can I say For a chartered accountant, this type of explanation is required, because then only you will be habituated of learning this thing. What is actually happening in the market. So once, but two things I will say that, when you are into CA Inter, start reading newspaper and start listening business news. You will get most of the thing from there. Means your knowledge will increase. Your knowledge will increase. Normally, what happens when a CA student is there? So CA student don't have any market knowledge. If they do not have any market knowledge, so the studies become what thoda sa non-interesting. So when you are learning, if you learn as per the market, so then interest will come. Okay. Now I hope you are understanding whatever I am saying. Once the right is announced, then if anyone is purchasing shares from the market, stock market, so with shares they are getting a right. So the market price will increase considerably. Why it will increase? Because with shares you are getting a right. Understood? It means initially it was X right, so this will become cum right. Cum right means it is including the value of right. So 50 is the value of shares. 5 is the value of right. Understood? Now, suppose this we call record date. Record date means the date when the right will be declared. The date when the right will be declared. Understood? Now, suppose this Mr. X, initially they purchased how many shares? 1000. And again they purchased 1000 equity shares yahan par. So they have purchased this at rupees 55. Correct now? So this shares was purchased at 50 and this shares they have purchased at what? 55. Have you understood what I am saying? Understood? Means on this date he is holding how many shares? 2000. On this 2000 he will get right. Correct now? So batao, on the first 1000 he is getting how much right? 500. And on the second 1000 how much he is getting right? 500. So total 1000 right is also getting additional shares at rupees 15, at rupees 15. It means, can I say in this way? Can I say in this way? Just try to understand what I am saying. If from Mr. X point of view, he has two type of shares. One shares which was not purchased at cum right, his initial 1000 equity shares, it was not purchased at cum right now. And one shares which was purchased at cum right, this is 1000, because for these so they are paid 50, for these they are paying 55. Understood? Now on this how much right they have received? 500. Correct. Now they have sold this at rupees 2. They have transferred this right to some other party. Transfer right. So how much consideration they have received? Suppose 7. They have transferred 7. So how much consideration they have received? 500 into 7. How much? 3500. Correct. Now, but whether this purchase price is inclusive of right? When they have purchased 1000, whether they have paid anything for right? No. And therefore this will be transferred to PL. Therefore this will be transferred to PL. Understood? But in this case what happened? Just try to understand. They have again got how much right? For that, suppose they have transferred this right at rupees 7. But you only think, when they have purchased these shares on which the right was available, they have paid extra how much? So 5 they have paid for what right? And now how much recovered? How much is recovered? 7. So how much should be adjusted with cost price of investment? Means can I say out of these 500 into 5 should be adjusted with the cost price of investment, and 502 should be transferred to what? PL. Understood? Are you able to understand? Are you getting what I am saying? So this 5 is what? This 5 is come right price minus what? X right price. This will be given in the question if they ask. Are you able to understand? So they will give you on the record that the price become X right. So normally what happens, once the right is declared, automatically the price will become again 50. So that become X right price. So what is the original value of shares? 50. But you purchase at rupees what? 55. How much extra you are paid? 5. So if the consideration received is 7, so out of that 7, the recovery of cost is what? 5. That will be deducted from cost price of investment and balance will be transferred to PL. This is the concept. There is only one question of this nature which should not be asked, but you don't know ICI. In MCQs, they can ask this type of question. So they want to say this only. Whenever no information about come right, X right is given, however, in the question now, whatever we have done method, so they don't give come right, X right information. So whatever sale proceed, we'll assume it will be transferred to PL. So we are taking one assumption that sale proceed will be transferred to PL. But actually, this is the rule. This is the treatment. Actual treatment is this. Got this point? तो कर लेना आ गया ठीक है ओके